Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol, UNG. Today we are down about 20 basis points and we have about 1 hour and 30 minutes left in trading. On the 1 hour chart we do see the 1 hour MACD pointing up and may turn positive soon, and we made a nice recovery since this morning. We were over negative 1% and now we're only up or still down negative 20 basis points. So on the 4 hour chart, we do see a possible convergence on the 4 hour MACD, and on the daily chart, we do see we are still on positive MACD. However, we do see a divergence on the daily MACD, but there is support on the 18-day moving average and the 150-day moving average that is currently acting as firm support. And as you can see, there was a gap filled and we did manage to fill in that gap this morning. So there could be a possibility we may head on higher. So if we were to find support, if we do break lower than this 18-day moving average, I do believe we may hit a possible floor around the price of $21.10. There was a slight floor or price concentration in between September 4th and September 5th. And as for resistance, I do see us heading back to the 200-day moving average again. And that price is at currently $23. So if we were to move on higher, that price movement is roughly around 5.6%. But if we were to reverse and head down lower, that price movement is roughly 3.4%. So if we move to the forecast model on here, I'll go day by day where natural gas will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? The model that is the best match to the current trend. We have the current trend right here, and below it is the trend that I believe is the best match. And this trend dates back to December 21st, 2012 to March 25th, 2013. Let me point out why these two charts are similar. So what we have here in the beginning, we start off touching the bottom Bollinger Band. And let's just mark all the instances where it touches the bottom Bollinger Band. And now let's mark all the instances where it touches the upper Bollinger Band. So we have one, and the last one is right towards the end. And let's mark where it reverted to the mean and touched the middle Bollinger Band. We have one right there in between the green and red circles. And let's move on to the trend in question. We have this trend. So as indicated before, let's mark all of instances where we hit the bottom Bollinger Bands. So we have 2 instances. Let's mark where it touches the upper Bollinger Bands, and same thing, we have 2 instances where we touch the upper Bollinger Band, and then finally mark where we touch the middle Bollinger Band, and we do have it as well. So we have about 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points on the current trend. So there's reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same. The forecast model that we just examined was 2012, December 21st to March 25th, or March 25th, 2013. Back then, natural gas was up roughly 1.3%. So slightly favoring to the upside. And here's the line chart that I compared it to. So we have the current trend right here, and overlapping it is the 2012 to 2013 trend. So that is it. If you enjoyed this content, feel free to like, comment, subscribe. And if you want this forecast model, feel free to subscribe or sign up in the link below and get it on release. Thank you for watching.